Justin Werner here, Managing Director of Nickel Industries Limited. We're an ASX 200 company. We have established operating footprints in what are now two of the world's largest nickel production centres in Indonesia on two islands, Sulawesi and also Halmahera. Indonesia is forecast to produce 60% of global nickel supply by 2025. And we have footprints, as I said, in two of the world's largest industrial parks, producing significant low-cost nickel units for the stainless steel. And we've just more recently now transitioned into the battery EV market. On this slide here, you can see an overview of the two industrial parks that we operate in. On the left is what's called Indonesia Morowali Industrial Park, or IMIP. That's the world's largest fully vertically integrated stainless steel park. Has capacity for 3 to 4 million tonnes of stainless per annum. Currently has 44 operating RKEF lines, which is rotary kiln electric furnace, with a further 8 under construction. We have, of those 44 operating lines, we have 4 lines that are in operation, and of the 8 under construction, we have another 4 that are under construction. So it will take our operations to 8 RKEF lines within IMIP. In terms of employees, it employs 45,000 people. 40,000 of those are locals. It has 3 gigawatt of captive power, and also more recently has just commissioned 2 high pressure acid leach plants, which produce a mixed hydroxide precipitate, which is very applicable for the EV battery market and can be upgraded into nickel and cobalt sulfate. We also have an interest in a high-grade, large tonnage mine, which is about 12 to 15 kilometres from the industrial park, and we supply both high-grade saprolite ore and limonite ore to the RKEF and HPAL operations within the IMIP. If you look on the right there, Indonesia Werner Bay Industrial Park, which is basically on the neighbouring island, really just a carbon copy of IMIP, other than at this point there is no plans for any stainless steel capacity. Again, very large, 35,000 employees. Across these industrial parks, there's been almost US 20 billion invested, and as I've said, two of the largest stainless steel and NPI and nickel production centres globally. Really some world-class operations. We've just undergone and are coming towards the finalisation of a tremendous ramp-up. If you look at this chart here, you can see last year our attributable nickel metal production was 32,000 tonnes. We just recently commissioned 4 more RKEF lines called Angel Nickel, or ANI. And you can see the next green bar, which is 70,000 tonnes. That's our attributable nickel metal production currently on an annualized basis. We have 4 more RKEF lines called Oracle Nickel, or ONI, which come online. Our first line is commissioning at this point in time. That should be fully ramped up next year. That will take our attributable nickel metal production to in excess of 100,000 tonnes on an annual basis. We've been listed only a little more than 3 years, so tremendous growth profile. If you look at some of the others that we've leapfrogged over, BHP, Eramet, Sumitomo, I mean, some of these guys have been in nickel for 40 plus years. We've been able to achieve this through our relationship with Tsingshan, who's the world's largest stainless steel producer. They built and operate the 2 industrial parks that we just looked at. They're our largest shareholder. And what's attractive of working together with Tsingshan is all of the nickel capacity that we've built with them comes with a capex guarantee, a nameplate guarantee, and a time frame guarantee. And in all instances, they operate successfully at sort of 130% above nameplate. And so, look, we'd like to think that the business is about as de-risked as you can see a business. It's also an industrial business. These RKEF lines don't rely on ore from our particular mine. They in fact source ore from all over the archipelago. And so, as a result of that, and the fact that we have very little sustaining capex, unlike a traditional mining company, taking the case of an underground mining company, which would have significant ongoing sustaining capex for mine development, we are talking about sustaining capex in our business of only a couple of $1 million every couple of years to reline the kilns and the furnace with refractory bricks. We're also the beneficiary of, for 4 of our RKEF lines, a 7-year tax holiday at 0 tax, and our new 8 lines at 10 years of 0 tax. That allows us to free up a lot of cash that we can reinvest into growing the business and also return money to shareholders. So we are a material dividend payer. We paid 4 cents Australian last year, and we've already paid an interim dividend this year of Australian 2 cents. So just finally, as I said, we're in the midst of a ramp up. If you look at our production last year from 4 RKEF lines, and these RKEF lines are older and have a 20% less capacity than our next 8 RKEF lines, 4 of which are ramped up, the other 4 which are commissioning. Our EBITDA last year was US $225 million from our existing 4 RKEF lines. We're now moving to 12 RKEF lines, and those additional lines have a 20% greater capacity. We would expect to sort of, at least triple that current EBITDA. So you can take those numbers and depending on what the margin is, you can see the size of the business and the cash flows that we'll be generating. All of this growth is paid for. It's locked in, as I said, comes with a CapEx guarantee. It's about as risk-free as you can see. So it's an exciting time for the company. I would just finish on the note that we've actually converted 2 of our RKEF lines into the production of nickel matte. Nickel matte is what's called a Class 1 nickel product, and that has direct exposure to the LME Shanghai futures pricing and is applicable to be used within the EV battery market. And we are looking to grow our nickel units and exposure to that Class 1 EV battery market. And that will make us a truly diversified and probably the only listed global listed nickel producer that has exposure to not just the Class 2 nickel market, which is typically nickel pig iron for the stainless steel industry in China, but also for that Class 1 battery market, which is obviously experiencing considerable growth year on year as the penetration of EV vehicles continues to grow. The Hengjaya mine, which is the next slide, not only do we have a very robust industrial operation, but we're underpinned by our Hengjaya mine, which was our foundation asset, has 3.7 million tonnes of contained nickel metal, places us up amongst top 10 global known resources for nickel. So we're sitting on very large nickel resources, and that number will continue to grow. Finally, we released our quarterly result, over 20,000 tonnes of nickel metal production for the quarter, which was a record. Over cash generation from operations of US 54 million or US 55 million. Not our strongest quarter as we experienced some margin contraction, but pleasingly our costs are continuing to trend down. NPI prices, we're now seeing a trend back up again. And so we expect to move back into the sort of margins that we were generating of sort of $4,000 to $5,000 a tonne. And in fact, last quarter, our June quarter, was a record quarter where we generated over US 100 million in EBITDA. And finally, our mine had a record quarter as well for the September quarter of close to 1.7 million tonnes of ore that was sold. So look, in closing, Nickel Industries is the largest nickel producer, pure nickel producer on the ASX. We continue to grow. We have very strong industrial style margins, but we're underpinned by a world-class global nickel resource, which is obviously very important. And we're now transitioning and making that move into the Class 1 EV battery market. I would just end also on a sustainability perspective. Pleased to announce that during the quarter, we won a number of awards, achieved ISO accreditation. We've won awards for best mine site rehabilitation. We produce an annual sustainability report. We are now in the process of implementing 440 megawatt peak of solar, and we will continue to grow that. So thank you for your time.